Our industry will play a very big role in not only being a catalyst for that growth by supporting entrepreneurs, by supporting businesses, but also ensuring that that growth is shared with larger and larger number of households in India to make that growth more equitable, more inclusive. I think our industry will play a very big role.
I think what it will do for our country is significant expansion from a 5 crore base. If we can get to a 10 crore base, 15 crore base, 20 crore base as an industry, we will see the benefits. The fund house may not see the individual benefits today, but the industry will see the benefits.
Is there any lawyer which says that I am wrong, but I'll guarantee you that every court case you will win?
Doctor.
Is there any doctor which says that I am right and I will ensure that you will live? I haven't met any professional which gives that kind of guarantee. In fact, in the mutual fund, we are at least saying that long term mein paisa bana ke denge.
Hello and welcome to yet another edition of Fortune India's Boardroom. Boardroom is a forum where some of India's topmost minds discuss various issues which are topical and which need threadbare discussion. At the time when markets are so unpredictable, we have with us to discuss markets, mutual funds, personal finance, and the whole gamut of issues around mutual funds, 4 of the finest minds in the business. I have with me Navneet, Munot, Jignesh Desai, Radhika, Gupta, and of course Nilesh, Shah with us to discuss various aspects of the mutual funds business, the highs and the lows, the challenges and the opportunities, and how mutual funds can really be sahi hai for the smaller investor. And joining me in this discussion is V. Keshav Dev, Executive Editor and my colleague. So with this, Keshav, I throw the floor open to you for your questions, and we will keep this discussion free-flowing. Please feel free to jump in and interject, stop us, and make your point whenever required. Over to you.
Navneet, I want to start the question with you because you also not just represent SBI but also as the AMFI chairperson. Mutual funds for long has been seen as, at least AMFI has done mutual funds sahi hai for quite, I would say, many years, and it has, proved to be, in some sense, a vehicle for wealth creation. But of late, at least over the past couple, since October, we have seen the kind of, sell-off, and that has culminated into the patience of kind of SIP investors wearing off. You have seen SIP cancellations now nearly 10 million in the past 2 months. So has that narrative of mutual funds being sahi hai has tested retail investors' patience, and now with the kind of SIP cancellations that we are seeing, is the story somewhat losing its sheen, if you could?
No, not at all. Rather than losing the sheen, in fact, the February SIP number is a testimony of the resilience of individual investors, and the efforts made by the industry over the last several years, I think, has really paid off. If you look at the SIP amount of 26,000 crores, adjusted for the lesser number of working days in the month of February, it clearly shows the resilience of the investors, the maturity of the investors, that despite the volatility over the last couple of months, investors have continued with their faith and trust in the product. They continue to believe that money can be made over a long period of time by remaining disciplined, by maintaining consistency, and correction is a part and parcel of the long-term growth story. And in fact, it is good that in last couple of months we have seen a correction. Otherwise, for last couple of years, the way markets have been, expectations would have got set wrong. And this is what our industry's efforts has also been, to keep highlighting the risk that in the short run, markets can be volatile. And the only way to create wealth over the long term is by remaining disciplined and continue with your SIPs.
Jignesh, what's been your perspective on this?
I think I agree with Navneet, and even in last 30 years, if you look at the data, I think at every fall there is going to be some amount of stoppages and all. But mutual fund sahi hai, but distributor jaruri hai. I think it's more of a behavior management, and it's very important at this point in time to provide confidence to the investor on his journey of SIP. And I think what we have seen is in our book also, the distributors, those who are meeting customers and explaining them about the long-term power of compounding and all, I think we see a great response from the investors. And even the matured investors are topping up the SIP in current market situation. So they are getting more units where the NAV is low. So I think SIP and the mutual fund is always sahi hai.
Okay. Radhika, what's your take? Because every time we say that, there is a crisis, then they say that look at the long term, look at history. If you stay invested for long, but if you see the whole push or, that whole excitement around SIPs only has been post-COVID, both on the DMAT side as well as on the SIP sides. And most of these investors are new investors who haven't seen market correction at the scale that they have seen. So how are you kind of, viewing the whole the situation?
So, firstly, I think we have to realize that SIP has become a very powerful brand. In fact, I would argue it has become a bigger brand than mutual fund itself. Today, people from every strata of society come and say, मुझे SIP शुरू करनी है. So whether it is as a savings vehicle, whether it is as a structure, or whether it is as an investment vehicle, it has become a brand. And it's also, because it's become a brand, it's also something that is under so much scrutiny. I mean, 6-7 years ago, I don't think people were monitoring January mein SIP book will be how much, February mein SIP book will be how much. Now, SIP has fundamentally been a long-term story, and my favorite statistic that I've quoted in all the volatility of the last 6 months is, we have an old fund, Edelweiss mid-cap fund, and I looked at the minimum SIP return, worst case outcome that someone has had over 10 years. That is 9%. If 9% of reasonable post-tax basis is your worst case outcome, then over a long term, the SIP has not disappointed. Now, in every cycle, we feel like COVID is the first cycle we've had. We've seen investors who came in 2007, lost money in 2008, came in, lost money in 2013. There is a seasoning and aging of investors. I think the difference in environment now is there's so much more information. I mean, so many of us from the mutual fund industry are out there talking on television platforms, on social platforms, educating investors, using our distribution partners. And I think that's what leads to 26,000 crores in February. So the story is long term, and we're here to guide through the short term.
Yeah. Nilesh bhai, are you seeing that some amount of sensibility, because you have seen the markets both from an investing as a fund manager now on the as a CEO? Are you seeing some amount of maturity among retail investors, or we are still to see the pain ahead?
So Keshav bhai, whatever you say about India, opposite is also true. So I am seeing maturity in the customers of Jignesh bhai, where during market correction they are doing SIP top up. But I am seeing stupidity in the employees of mutual fund. Very recently in Mira Road, a collective investment scheme, Taurus, went down, and rumor is that some couple of 100 crore has been lost. Some of the mutual fund employees put money in Taurus. So stupidity is existing and smartness is also existing. India's most educated state, Kerala, spends more money on lottery than doing SIP in equity. Now everyone knows that in the business of lottery, only the sellers will make money, never the buyers. The day buyer starts making money, Keshav bhai, sellers will stop. In fact, I have to convince Indians who have put 9 lakh crore in currency notes between FY21 and FY23, which is not going to give you any return whatsoever, that instead of putting money in currency notes, keeping at home, and tijori and bank lockers, please put it into mutual funds. The total flow in mutual fund in the same period, FY21 to FY23, was half of what went into currency notes. So there is stupidity in Indian allocation of savings. There is smartness also. And both peculiarities coexist. There are people who are very good in ensuring their financial security by use of market-related instruments. And there are people who are naive, who are unassisted and who are not able to invest or generate real return on their portfolio. Between FY21 to FY23, of the household's financial savings, not the real estate and gold, but the financial savings, 93% went into products which will not give above inflation return. Only 7% went into products like mutual fund equities which will give real return. Now imagine you are running the marathon race of your financial security, your financial freedom, and you only want to use 7% of your lung capacity. Forget the marathon, 100 meter nahi daud payenge. And which is why India remains a poor nation, because we are good at savings, we are not so good at investment. And which is where Jignesh bhai's point, mutual fund sahi hai, but distributor zaruri hai comes into play. Everyone thinks that market should deliver return since they invested money. But भाई अगर पैसा बनाना इतना easy होता तो हम लोग सब बिलियनर होते. Market rewards patience, market rewards long-term investing. And SIP is a very, very simple instrument with which you can get that kind of magic.
I have two questions. You've raised some very important 2 points, Nilesh bhai. 2 points. One is about governance. The first point you raised about employees acting in a certain way, which is stupidity, giving mutual funds themselves a bad name. That itself is a cause for concern, which I'm sure all of you at the top level, at the CEO level and otherwise are aware of. So how does one address that? What is being done at the fund house level to address that? The second point I wanted to ask, in the rush of new investors, post-COVID in particular, who have come into the market, is there a lack of understanding? Seems to be, because if SIPs are being suddenly withdrawn, again there is a 26,000 crore inflow in SIPs, there seems to be a certain irregularity in terms of their investment behavior. Do you think that the younger generation or the newer millennials who are coming into the markets have an inadequate understanding of what a mutual fund is, what the markets can or cannot do? Because they've, like Keshav said, they've not seen a downturn at all. Now maybe they are being exposed to it, the vagaries of the market. So these are the two questions I want to pose to you.
So as mutual fund, our job is, we are managing people's trust. People give us money because they trust us. And anything which destroys that trust is non-negotiable. We can't afford. So any mutual fund employee who is involved in doing anything wrong, there is, I can say on behalf of all the mutual funds in India, zero tolerance policy. Those employees will be thrown out. Now, will there be bad apple in the basket? Answer is yes. But whenever those bad apples are discovered, they'll be thrown out, no doubt about it. Second, the conflict of interest and governance definition keeps on changing. When I started my career, I could have given you a tip about stock. Today, it is regulatory, not permitted. So the governance and the regulatory mechanism also will keep on changing with the advent of time. But rest assured, as mutual fund CEO, as member of the mutual fund, we have zero tolerance for any misgovernance, and every bad apple will be thrown out. Now, in every community, there is no homogeneousness, there is heterogeneousness. So there are millennials who are extremely smart. In the same hotel, I had come for a conference and someone said that Nilesh bhai, ye ladke ko milo, bahut acha equity ka knowledge rakhta hai. And like, I'm a 30-year veteran, people call me market guru, abhi bacche ko milne ka. Fortunately, I controlled my ego and went and met him. His knowledge on stock was far, far superior to me. On the other hand, I have met people who believe they can trade in stock market, in futures and options and make money. They don't have to work. Now, both people coexist, and which is where some people gain knowledge by education, by reading, by observing, by listening, and some people gain knowledge by experience. They lose money in FNO, crypto, lottery, Ponzi schemes, keeping money in currency notes, chasing momentum, and finally they realize mutual fund sahi hai.
If I can add on the
Yes,
governance side, that our industry takes pride in having a deep skin in the game. So as the AUM grows, the asset management company from its balance sheet keep investing. Also, all of us in the leadership team, all our fund managers, all our analysts, they also have continuing investment in the scheme. A portion of our salaries, a portion of our remuneration goes into our own schemes, and over and above, our large part of, or maybe a good part of our savings go into our schemes only. Yeah.
So you money where the mouth is.
Absolutely, yeah. And this industry is a classic example of that.
And I don't think, by the way, I mean, I've spent some of my career overseas investing. I don't think most asset management jurisdictions in the world
won't have
require an
both of
employee's
these. Yeah.
skin in the game, where before the money hits mine or Navneet or Nilesh bhai's bank account, some of it goes to Government of India by way of taxes, and some of it goes into skin in the game where it is locked for 3 years. I don't think there are any other industries in India where you are forced, if you run a biscuit company, you're forced to have 10% or 20% of biscuits in your diet. So this is real. Many of our investor protection are disclosure standards. And I think, again, I speak on behalf of, today, outside of the returns your mutual fund is making, you know the salary of your CEO, the salary of your leadership, the commissions paid to your distributor, the fees, the portfolio. What don't you know? So we are the most transparent vehicle out there. And last thing, if I can add on governance, there are very few vehicles in India where if I want my money in 2 days, I can get it without asking. Bank mein locker band karna ho na, it is a difficult thing to do. If I want to claim money from an insurance policy, it is an even more difficult thing to do. If I want to get proceeds of a property, it is an even more difficult thing to do. If I want to get proceeds of HDFC mutual fund, I don't need to take permission from Navneet. I just redeem.
Both Navneet and Radhika has understated our problem. I'll be blunt about it. I get 100 rupees salary. 40 rupees Government of India takes away. 10 rupees goes into NPS because I also am chairman of our pension company. 10% go into EPFO, that's the law. So effectively I'm left with 40 rupees, of which SEBI says put 20% in the skin in the game circular. Balance 20 rupees my wife takes away. So I am always with empty pockets.
Even my husband takes away.
Absolutely. So this is the real challenge.
Now, Radhika, you are a Shark Tank veteran. You deal with Gen Z and millennials also. Tell us about this question I asked Nilesh bhai also about new investors and what they think. How are they supposed to understand the nuances of mutual fund versus looking at, and in fact Amphi even the campaigns try to tell the investor that this is not a mutual fund. Sachin Tendulkar no less is talking about it.
It's mutual fund.
Exactly, it's not a magic fund. So how do you beyond this, what needs to be done?
Okay, so I have a slightly counter view here, and I'm no longer very young, even though he gets called market guru. For many years I've been called youngest CEO, even though I'm no longer young. It's been 7 years since they've been calling me that. But I think we are too critical of our younger generation, not just as investors. By the way, our parents were also very critical of us. Everyone thinks the next generation is impatient, lazy, spends too much money, doesn't have respect for their parents. Even your parents thought the same thing about you. I think India, and I agree with him, you can't homogenize anything in India, in a country as large as India, especially young people. I think to give young people credit, they have access to a lot more information than even I started 20 years ago when I started investing. Whether it's through social media, whether it's through content, whether it's through guys. Now it's their choice whether they want to use that information to do sensible things or speculate on online gaming platforms that have nice ads. They are starting their journey of compounding and long term much before even my generation did, and much before. So I think they have all the tools, they have more risk appetite, they have more access to education. Again, within this lot, you will see people who are doing foolish things, but I meet tremendously smart people. I meet people at airports who come from tier 3 and tier 4 Indias, including Shark Tank companies, who have such a deep understanding of business. And these startups are such a joy to watch. They have an understanding of money. I think we should stop as older people generalizing young India.
True.
Nilesh, to your point on, the investors should be patient. So, to me, it seems that the FII's patience has finally been rewarded because the kind of sell-offs that you have seen and, the markets in there. So, the patience of the retail investors is being enjoyed by the FIIs. To that extent, when, the so-called SIP investors don't see money returns, 3 to 4 years down, how do you reconcile to that narrative that might soon emerge if the markets continues to head south?
So, one, why will market continue to head south? It's possible if our earnings collapses or if our valuation collapses. In 2020, listed corporate India's profit was 4 lakh crore. It's likely to be 18 lakh crore at the end of March 26 financial year. Now, do I foresee in FY29 or FY30 18 lakh crore becoming 4 lakh crore? Or 18 lakh crore becoming maybe 26, 30 lakh crore. I guess 99% people will say it's more likely to go up than go down. So earnings wise, I don't foresee India going down, creating market correction. The second thing is valuation. Valuation is function of earnings growth. In last 10 years, China's EPS growth is about 30%. India's EPS growth in the same time period is about 180%. As long as I grow better and faster than my peer group, will the valuation premium stay? Answer is quite likely. The second is governance. In India, corporate India can take government of India to the court of law. Try doing that in China. Try doing that in Turkey. Between growth and governance, I don't foresee India's valuation getting derated substantially. It can go up and down 10, 15, 20% always, but it's unlikely to get derated so meaningfully that our markets will go down over 3, 5, 7, 10 years.
It may not go down, but the moment you see a rise, you might see more FII selling because it's rewarding their capital, right? It's not rewarding the retail investors. So then what happens?
Fair point. So FPIs have become underweight India. Against our weight in MSCI emerging market at 19%, they are at 16%. Now, if I am the best investment option in town, will people sell or will people buy? Number two, the FPIs have been not doing quit India, they are doing quit emerging market. Because over 5, 10, 15, 20 years, in emerging market, as an asset class, they have made far less return compared to developed market or US market. The ratio is 2 times, 4 times, 5 times. Within emerging market, it is like 1980s India's cricket team. Sunil Gavaskar was the only batsman. Rest of the guys were there just for show. India has delivered return in emerging market, but rest of the emerging market hasn't delivered. Which is why valuation-wise emerging markets have become cheaper to developed market. Now, could pendulum swing and money start flowing towards the emerging market? Not today, not tomorrow, but day after tomorrow? Quite likely. So I don't foresee FPI selling away consistently and assume that they just continue to sell. Yes, market will continue to buy them out, certainly not at this prices. But once their selling is over, you know where the prices will go. In COVID time, March, April, May, June, they sold. Market fell from 12,500 to 7,500. Moment their selling stopped, market bounced back. They sold between October 21 to June 22. Market fell. Moment their selling stopped, market bounced back. So even FPIs realize that today India gives them opportunity to participate in growth story which is unparalleled in the world. As long as I deliver on growth and governance, I foresee our markets doing well and FPIs becoming buyer rather than seller.
Radhika, what's your...
But I mean, how... Sorry.
Go ahead.
How will a trade happen? If there is a buyer, there has to be somebody who's selling in the market, right? Otherwise, how will the trade happen? And there are three major participants, right? You have a domestic investor who could be institutional or a direct retail investor. You have a foreign investor, and you have the promoter. Promoter could be a promoter family, it could be a private equity fund, a government of India, or a multinational, right? So if domestic investors are buying, then it has to be a company or the foreign investor who's selling. And also that over the years, from almost nil 3 decades back, their ownership is still like very close to 17-18% of the overall market. So FPIs are still a very large investor in the market. In fact, calendar year 24, net selling, if you look at both secondary sale and the primary market purchase, the net selling was not very high.
I would just add two things about FPIs here. Just to add to what Nilesh bhai said, I think you need to look at the context of FPI selling that has happened over the last few years. When a local investor invests, it's an absolute decision कि India में करना है या cash में रखना है. I mean, that is the decision point that you make. With FPIs, you have to remember that over the last year, US interest rates have been at 4.5. Again, I spent about 3 weeks in the US in the last month. Most US private credit is at 10, 11, 12%. And for them, private credit in their market is as good as quasi-sovereign, right? When your home market equity is delivering the returns it has, when your home market debt is delivering 10, 12%, forget India, why will you do the matha pachi of any emerging market? That reality cannot last forever. In fact, you could see a scenario where over the next year or two, given everything, US might see a recession and you might see capital genuinely move to a China or in India. So the selling has had a context. Secondly, and I think to give some of us sitting here a little bit of credit, if you look at the market reaction to FPI selling from 2008 to present, if you look at 2008, I think FPIs took about 40,000 crores out of the market. Markets fell about 50% in that period.
Right.
In COVID, the number was larger. Markets fell about 30%. I mean, in this last 6-7 months, FPIs have taken out more than 1 lakh crore. Markets have fallen about 20% from peak. So the impact of FPI selling, because of people like us and because of the power of domestic retail, has also gotten a little less sharp. India has acquired, I would say, a little bit of Teflon coating. So there's no reason to structurally believe that India will not do well. And even if there is FPI selling, it can't be persistent and the impact is getting less sharp.
Jignesh bhai, I wanted to ask you, coming back to your point about distributor zaruri hai. Now, there is this whole rush of money coming into the markets in various forms. Even if it's 7%, it's a large sum of money. SIPs are coming in. How does a distributor guard against mis-selling? In terms of because there is so much information available both sides. How do you look at mis-selling, and how is the distributor also gearing up to understand how best to sell mutual fund instruments?
And just to add to Saurav's point, that at the peak when the going was good, I mean, you had NFOs coming, thematics aa rahe the, sab aa rahe the, but no one stood out and said that hey, let's hang on, everyone was looking to milk the boom rather than say that so can narratives only say that mutual fund sahi hai or should ab ruk jao?
Is there a guidance or is there an advisory role more and more? I'm sure anyway distributors are doing that, but is there beyond this, is there a role given the turbulence in the market, given the uncertainty which has now become the norm? So how do you look at from a distributor perspective?
So fundamentally, if we talk about our earlier point of governance, I just want to touch upon a couple of points there. The mutual fund regulations came up in 1992, the open-ended funds. And when I meet some of my friends, they are into manufacturing, and then they always said that China is 20 years ahead of India in terms of manufacturing and all. And I replied them that I don't understand much of a manufacturing, but as far as mutual fund regulations are concerned, it is 20 years ahead of the Western market. So we are very proud of our regulation as an Indian. That is the step one. And we have not seen a single fraud in mutual fund industry in last 30 years. I think that is also very important to note. When it comes to advising customer, I think the golden rule of wealth creation is start early, invest regularly, invest in right asset class and invest for long term. I think these are the basic principle of investing for a long term wealth creation. And we always advise our advisors to promote long term investing through systematic investment plan. And as I said, the structure, the vehicle is so powerful and it is highly regulated. The certain features of the mutual funds are underrated. And one of the magical feature of mutual fund is the diversification. It is a so powerful mechanism set by the regulator in terms of capping on the sector, capping on a particular stock. It's very, very amazing. Second, despite of a very strong regulated product, I think is the cheapest product in the world and the best performing product in the world. So considering all these facts, I think the role of a distributor is to manage the behavior of the customer. You are sitting in the right boat. Now it is time to take a long-term view. Your conviction on India is important. Your conviction on Indian mutual fund industry is important. And based on that, you manage your customer behavior. I am very confident in next 10 to 20 years, investor will create wealth through mutual funds.
Saurav, if I can stand up for his fraternity, thoda sa, there is a lot of conversation that happens on mis-selling. And I'm sure there are good distributors and bad distributors in every industry. And I don't think you will last if you don't do a good job for customers. But I think people should also think about this concept of misbuying and how buying happens on direct platforms. Our brand did a survey 2 years ago and we looked at all our customers on direct plan and we looked at regular plan. The longevity of our regular plan customers was significantly higher than our direct plan customers, because when you go on a website, what you typically do is you sort by maximum 1 year return, which is the most abused statistic in our industry, because whoever has, and then you end up buying last year a PSU fund, an infrastructure fund, or pata nahi kya kya you end up buying, and then it reverts the next year. If you look at the last 6 months also, more stoppages are seen from such people who have the ability to stop at a click of a button than from these platforms.
That's true.
But
So
on the
is there an
point of,
advisory gap to that effect? Because when you say in regular plans you give advisory, retail में direct में आप नहीं करते हो. So should AMFI kind of...
But first I need to give you a rebuttal on that whole point on the sector and thematic that if money is coming, take
I mean,
it,
yeah,
whichever
that's a boom.
fund.
I mean, you make
No,
the most of it.
I must say this. So we launched the HDFC Defense Fund 2 years back. And immediately after the NFO, when we realized that more money coming in and stocks are doing well, we stopped lump sum flows and started taking only SIPs up to a very small amount. And around a year back, we completely stopped even a new SIP creation in that fund. And it's an open-ended fund. The sector had done very well, but we thought that investors' expectations are running far ahead of what the market can deliver. That was the view of the fund management team, and we completely stopped it. The fund would have collected maybe few hundred or few thousand crores more. So all of us are very responsible, and I think almost I can speak on behalf of Nilesh Bhai or everybody else. Everybody has been very, very sensible and cautious, because at the end of the day, we all realize one fact, that industry has grown handsomely in last couple of years. That's thanks to the track record we have built, that thanks to transparency that we have built, that thanks to the tremendous amount of work on earning the trust of the investors, that this is a product where in the long run you can create wealth provided you remain disciplined.
Navneet, let us come to one interesting development which has happened in your sector, which is the sachization, in a sense, of mutual funds units. Now, the SEBI has brought this 250 rupees and made it smaller and smaller, easier for smaller investors to come in. Do you think this is going to be a kind of a game changer? What is your sense? Because already State Bank of India, SBI has already got into the game in a big way. What are your thoughts on this from an AMFI perspective as well as from a fund?
I think our entire industry has launched what we call a Chota SIP or a mini SIP or a Jan SIP of a minimum 250 rupees a person can participate. The beauty of our product is that to create wealth in the long run, you don't have to start with a large amount of money. You don't have to be a stock market guru. You don't have to have a large sum of money to invest with. But wealth can be created even by investing a small sums over a long period of time. In US, they call it 401k millionaires. There are hundreds of thousands of people or millions of people who become millionaire, not by investing millions, but by investing very small amount over a long period of time. This is what we are seeing in India as well. But again, just like the point that Jignesh bhai mentioned earlier, there are several things where we have been far ahead of any other part of the world. I don't think in any other country in the world you can offer a product where you can invest, you can participate in the market with a professional fund management and a diversified portfolio in a highly transparent manner, so technologically enabled with just $3 a month. And some of us have been running a minimum amount at 100 rupees, which is like just little over $1 a month. You can participate in India's growth story. This can only happen in India.
Do you think that will be the way forward now, smaller and smaller?
I'll add to this. As I said, the golden rule of wealth creation is start early, invest regularly, invest in right asset class and invest for long term. I think start early, invest regularly is already there in our culture, because I remember that one of our friends was having the grocery shop. I'm talking about 40 years back. And there was a recurring agent. He used to come to the shop and collect 50 rupees daily from the galla. And then they issue the passbook and all. So that is already there in our culture. I think the only shift which is required is the right asset class. And for that, I think mutual fund is a game changer, number one. Number two, this 100 and 200 rupees SIP is not a small SIP, it's a big SIP. Because just to give you an example, I met one chaiwala. He said, I am contributing 50 paisa per chai towards the SIP. And he sells 1000 chai. So that comes to 500 rupees. So he invests 500 rupees per day. So if we take the 20 working days, that is 10,000 rupees. So even we as a group, we started promoting daily SIP. So the amount is small, then you reduce the period. Then it's become big. So for us, what we see in next couple of months and maybe a year or two, the average SIP number will increase because of this small amount. And in mutual fund industry, I think the efficiency is so powerful in terms of customer servicing through R&T and AMCs and all, that now the daily SIP is possible. Now in those days, there was a cash transaction, so there was a money in the galla. So he used to give 50. Abhi to Paytm, ye wo sab aa gaya. So there is no money in the galla. So everything is electronic. So that is also added advantage that every day you can do SIP through your electronic mode.
Does it make business sense for funds though, as they become smaller and smaller? Like Navneet said, it is also, there is a full infrastructure in place, there is expertise at play. Does it make financial sense, business sense from a what would I say, fund house point of view to go smaller and smaller while it has its major benefits?
See, I think if the question is to me,
Yes.
I think fund houses have to balance, and all of us are doing it, balance growth and impact. And it's not that impact doesn't make business sense, it's just your time horizon for that impacts. Now, the good thing is we've all been doing 100 rupee SIPs. I think with 250 rupee SIPs, two nice things have been carved out. One is some of the cost that we incurred to do the SIP has come down, which helps it make more business sense. Because finally, if it is a loss-making proposition, it's hard to convince people to push it. The second is, which I really believe is a very big cornerstone of this, incentivizing people, distributors to do this. A way has been found to give people incentives if they have people over 2 years. And I actually believe that today we have 1 lakh ARN holders. It excludes sub-brokers of people like Nilesh, Jignesh, etc. India probably needs 10 lakh distributors if we truly want to take this 250 rupee SIP movement to be very, very big. I think what it will do for our country is significant expansion from a 5 crore base. If we can get to a 10 crore base, 15 crore base, 20 crore base as an industry, we will see the benefits. The fund house may not see the individual benefits today, but the industry will see the benefits. Now, did mutual fund sahi hai as a campaign make economic sense for the fund house? I could have saved the 1 bip. It's a lot of money. Are we all beneficiaries of mutual fund sahi hai? Is it a profitable program for all of us? I don't think anybody would disagree.
A very valid point.
In fact, I think a case study, Navneet, should be written on mutual fund sahi hai by a major business
course,
school.
yeah.
It's a landmark program. We don't give it
A lot
enough
of people
credit.
have been
We should
talking
take it
to
up.
us on that.
We will take it up. That's a good idea. We will definitely take it up. Nilesh, by this point which Radhika made brings me to you. Do you think with SIPs becoming smaller in number and smaller, going down granular more and more, do you think it is actually enabling you to, as mutual funds, to reach even more smaller cities and towns, or do you think there's still some concentration remaining at the top of in the big major cities, tier 1, tier 2? Are you going deeper and deeper? Because the whole world, I mean, with small numbers, it can make a huge change. That's the point I was asking.
So, sort of the mutual funds are like bamboo tree. You have to plant and keep on watering, and then suddenly it starts growing. So, for example, in urban India, with rich people, upper middle class, the seeds were planted 3 decades back, 2 decades back, and hence the growth is far more. In the semi-urban India, rural India, lower middle class, poor, seeds are being planted right now. And the visibility of growth will come little later. Will it take as long a period? Answer is no, because today the driver has also realized, the maid has also realized that his or her owner is investing in mutual fund and making money. So there will be word of mouth publicity and there will be shortening of period. Plus we have now got the capital and scale to expand. See, our industry is where interest of distributor, manufacturer and investor is aligned. I don't run charity business, so I make money. Jignesh bhai doesn't run charity business, so he makes money, but we don't make money at the cost of investor. So, plus we are not like some of the fintechs which can burn capital and build scale. We didn't follow that model because when we started, that kind of capital was not available. On the other hand, we are also not some of those Ponzi schemes which could show dreams and take money and run away. If you remember,
Collective
20 years back,
schemes.
that PSCL, Punjab Agrotech Corporation Limited, raised money which was unbelievable. So it's like all good things take a time. Rome was not built in a day. Same way, this journey of securing financial freedom for every Indian, I think mutual fund is the only option through which they'll be able to get financial freedom, like 401k plan in US suggests. And it's the journey of managing trust. You don't get trust overnight. You have to toil, and then one day the results will be visible.
And Nilesh, to that point Jignesh made, if we have got truly diversified caps, or where you can invest. But is it truly the case? Because you've seen the froth in small caps, and you had Naren kind of calling it out, and he kind of got trolled for it, saying that unnecessarily creating a hue and cry. But tell me, today as you look, where do you see where there's pockets of value? And the other point is if this kind of SIP flows continue, so is there a sense of, the valuations going out of whack? Because there is also this whole thing about RBI which has capped overseas investments by mutual funds at 7 billion, which was a rule that came in 2008 when the forex reserves was very different from what it is today. So is there a need for you also as a fund house to really look beyond what is there within India to really have a truly global investing perspective than mere fund of funds kind of thing?
So Keshav bhai, if we look at mutual funds, everyone expects instant result. I invested
लेकिन
today.
आप सही है बोलेंगे तो instant result.
So, is there any chartered accountant which says that I am wrong and assures you that all income tax orders will come in your favor? Is there any lawyer which says that I am wrong, but I'll guarantee you that every court case you will win?
Doctor.
Is there any doctor which says that I am right and I will ensure that you will live? I haven't met any professional which gives that kind of guarantee. In fact, in the mutual fund, we are at least saying that long term mein paisa bana ke denge. In one of the other event, there was someone who said that why are you launching NFO today? Incidentally, he was my ex-colleague, so I could just ask him, okay, do you want to short the market for 10 years? He said, no. I said, do you want to short for 5 years? No. Do you want to short for 3 years? No. I said, then why are you asking me not to launch the fund? I am asking 10-year money from investors. You don't want to short the market, but you also don't want me to raise money so that other people can make money. You want to make money for yourself. That's such a selfishness. So, in the long term, because of the India growth story, will we make money? We have confidence, yes. Anyone who is not confident can please contact me and short the market at current level of Nifty for 10 years. I am happy to write put option. I have given this open offer to everyone. I haven't met yet anyone who is willing to accept it. Number two, valuation is reflective. Beauty is in the eye of beholder. We did an analysis couple of days back where we took top 50 stocks which has fallen maximum in NSE 500. Forget Kotak mutual fund, the entire mutual fund industry, everyone was underweight on that. Very recently, IndusInd Bank stock crashed. There were people who started circulating that mutual fund is losing this much. Finally, I had to come and say that, boss, there is something called index fund where I don't have any option. I have to just replicate. There is arbitrage fund where I'm hedged and hence price drops does not impact me. Collectively, most mutual fund schemes were underweight IndusInd Bank. But people thought that our gross loss is X without realizing that there is passive, there is arbitrage. In the top 50 stocks which have fallen maximum in last 1 year, mutual fund industry will be mostly underweight. We are no magician. We make mistakes. But if you give me money for the long term, we will make good return for our investors. Now,
when you say good return, how would I?
Above inflation return. I'll give you real return. No other industry will be able
Real
to guarantee.
return of how much, if you would say?
I don't know. What will be the inflation? I'll outperform inflation.
6% अगर पकड़ ले तो 6.5.
Keshav bhai, don't put me in a corner where I have to give a guaranteed return because I'm not in that business. The day I give guaranteed
A range
return,
is also good enough so that
the SEBI says that past performance is no guarantee of future performance, but experience suggests that people who don't learn from history ends up making a mistake. So learn from our history and take a call. The limited point where me, Navneet, Radhika and other leaders of mutual fund industry are working hard and we have failed. Other than equity, mutual funds have not been able to do a good job. On the debt market, we haven't grown. Debt mutual fund as a percentage of AUM, as Navneet keeps on mentioning, has actually kept on declining as a percentage of bank deposits. REIT, InvIT, SEBI has done so many things in the market, but as a mutual fund industry, we have not been able to present a REIT, InvIT asset class. The absolute return fund concept, we have not been able to launch. Commodity fund, other than gold and silver, we have not been able to do a great job. Alternate assets, private equity, venture capital, performing credit, we have a long way to cover. So investor just doesn't need equity, they also need other products. And which is where, as mutual fund industry, we have to work with regulator to create innovative products from performing credit to commodities to REIT InvIT to offshore, so that there is a wholesome solution available for customer. I accept as a mutual fund industry, we have a long way to go over there.
This is exactly, in fact, brings me to my next question about innovation.
Yeah.
This is exactly that's what Nilesh bhai talked about, Navneet. And my question to you, is there a lack of, or not lack, I would say, is there a need to innovate more in terms of the mutual fund industry? And I'll ask Radhika also the same question. The other point is, now that the markets are so uncertain, markets have always been uncertain, now even more so, what would a fund manager need to keep in mind when launching a fund or when running a fund? That is my second question. But the first point, which is very important, is what would how would you look at, because ultimately it is also linked to what the investor wants, Nilesh bhai. When you say equity, sabko equity chahiye, that's where the whole educative campaign of AMFI is, right? This is not an immediate return instrument. You're constantly talking about long term. So how does one bring this balance of bringing out newer innovative funds which are outside the equity ambit and yet becoming popular?
I don't think that a lot of innovation is needed on the product side. More innovation is needed on the delivery side in terms of how we can reach out to a larger number of people so that they participate in the growth story of the country. And in the financial household, in the household's balance sheet, if you look at the overall allocation, 50% is in real estate, 15% is gold, 15% is bank deposits. Equity allocation is less than 5%. So in India, equity itself is like an alternative. It is the smallest allocation in the current household balance sheet. So we have a long way to go. Of course, industry has been innovating. Nilesh bhai said on the commodity side, we started with gold and now we have silver. Over a period of time, there will be opportunity to add more commodities to it. Actually, on the debt fund side, and both of us take a lot of pride in starting our career as a debt fund manager. Our industry has delivered very well over a 25, 30-year period since we launched our first income fund, or even, let's say, a simple product like a liquid fund. But if you compare our size with the bank deposits, it's very tiny, and we have a lot of potential for us to grow. Jignesh bhai made a very interesting point about the recurring deposit, that Indians historically used to do this daily or the monthly contribution, and building that sum over a period of time through investing in postal deposits or through the banks, etc., and then some of the other schemes. I think there is something more that we need to do on that side for the SIP in the debt funds also.
So some innovation there.
Some innovation. And then what are the biggest societal challenge that I see in next 20, 30 years, which is that how 1 billion plus Indians will secure their retirement unless they earn inflation-beating returns over a very long period of time.
Which Nilesh bhai is guaranteeing us.
He's not guaranteeing.
He's not guaranteed.
Not guaranteed.
Your behavior will guarantee that.
Exactly, your behavior. So how do we nudge that? I think our industry over the last couple of years has been making sincere efforts. And I keep saying that when people tell me about that mutual fund Sahi Hai is a good campaign, I said, no, this is not a campaign for us. This is a commitment from us that mutual fund Sahi Hai. And we'll continue to work harder and harder to ensure we build more transparency, we build more trust, we continue to deliver good track record. And Keshav, to your point earlier, that now you have funds which have got track record of 30 years, 3 decades. And of course, Nilesh bhai mentioned, and I have to repeat that, past performance is no guarantee for future performance. But you can see what has happened in 30 years. There have been periods where foreign investors were buying, they were selling. We have seen multiple economic, business, profit cycles, credit cycles. We have seen lots of ups and downs.
In that 30 years, the retail participation you have just seen now.
Yeah.
At that. So when you extrapolate that 30 years, the retail participation was not there.
Because the industry now can go and showcase 30-year performance. Not that you will get these returns, but it just it just exhibits that through many ups and downs, And if you think about the recent correction of 15%, you can go and tell them that in 2008 market fell 50%. Between 2000 and 2003, market didn't deliver any return. This was the crash that happened in let's say 92, so on and so forth. But despite all of those ups and downs, you created so much of money if you remained disciplined.
If I can dispute here, Keshav bhai, 1991, what was the retail ownership of Indian equity? Take a guess.
It would have been 50%, more than 50%.
Yes. And what is it today? Including mutual fund, it is about 20%. So in 91, more people had allocation to equity than it is today.
Yeah.
Double.
Number two, how much financial savings allocation happened in 1991 in equity market thanks to 91 boom? It was 25%. What are we seeing today? Single digit. So participation of Indian retail investors in ownership as well as flow was higher in 1991 than it is today. And if you remember, there was a scheme called Master Game 1992.
But that would also be a function of the valuation. The bloated valuation, obviously the proportionate percentage.
No, valuations are
No.
much higher in 92.
Valuations
We
are
haven't
much
seen those days
higher.
yet.
I mean, if
Keshav was much
Nifty
younger in
starts
92.
trading at that valuation, we are looking at some crazy number.
Then imagine what our media will write.
The challenge, Keshav bhai, yahi hai ki, as you correctly mentioned, people rushed into equity market looking at the past 6 months performance. No one invested looking at what will be future 10-year, 15-year, 20-year. And which is where it is a matter of sadness that India's largest private sector bank, automobile company, FMCG company, telecom company, they are all majority owned by foreigners. When foreigners come and tell us that India is a closed economy, I said, we run one of the largest trade deficit after US. How can I be closed? And we give you majority ownership in India's almost all leading companies. How can I be closed? मतलब कुछ सोच समझ के तो बात करो, डेटा तो देखो, आंख बंद करके वही रिपीट करते हो जो आपने सुना है.
We are running at the end of our discussion. I will ask for quick comments or 30 seconds, on from each of you. We'll start with on basically what the future holds. What is the kind of road ahead which you all are looking at? We'll start with Radhika and then go around the panel.
So I think the future should be more of the same with wider reach. You mentioned the point on innovation.
Yes.
There's a misplaced idea that innovation is fancier stuff, more asset classes, someone now owning a nickel mutual fund. Innovation in India is not that. The greatest innovations in India have been very simple things at very large scale. Jan Dhan is incredibly innovative. COVID, what we did with vaccines, is incredibly innovative. SIP is not complex, but I would argue it's innovative and it is effective. So our need is not to run the next nickel fund or papal fund. We are very good running simple dal chawal mutual funds, but the future should be 50 crore Indians, 75 crore Indians doing that, and that will need innovation in communication, that will need innovation in features, that will need innovation in distribution. Perhaps the future also involves a lot more women coming forward and being beneficiaries of this growth that we've seen in the last 30-40 years.
Nilesh bhai?
अब उनका टाइम आएगा और पिक्चर अभी बाकी है.
आ गया.
नहीं ये तो ट्रेलर है, पिक्चर पूरी बाकी है.
अभी बाकी है.
पिक्चरें चल नहीं रही है, तो आई होप चल जाएंगी.
Jignesh bhai?
No, I think we are very bullish on the industry. And in coming years, I think mutual fund industry is going to be a very important and very meaningful player for building new India.
Navneet, the final word.
So I think our country is on its journey to become a Viksit Bharat by 2047, and our industry will play a very big role in not only being a catalyst for that growth by supporting entrepreneurs, by supporting businesses, but also ensuring that that growth is shared with larger and larger number of households in India. To make that growth more equitable, more inclusive, I think our industry will play a very big role.
So mutual funds will power the Viksit Bharat journey, India at 2047. As Nilesh bhai said, it is just the trailer, picture abhi baki hai. So lots more to see, and thank you very much for a fascinating discussion.
Thank you.
And we will be
Thank
back
you.
with you for more. Thank you very much.
Thank you,
Thank
guys.
you.